Hello friends, a very warm welcome to the next unit, that is accounts of not-for-profit organization. So what is non-profit organization? Basically, we know that most of the academies which are giving sports training are going to be not-for-profit organization. They are collecting the fees just for the maintenance of whatever activities are happening. Same way, there are clubs which are having this membership, and you can go and play any of your board games and you just pay a nominal fee as membership fee. Do you think they are making profit? Of course not. So clubs and they also give out their place on rent for birthday parties. Are they making profit? Of course not. Hospitals, they do a lot of treatment and other activities, but are they making profit? Of course not, because they are doing service to the public at large. So accounts of profit for organization topic will be covering all such aspects, and we will be going through each one of them in detail. So what is not-profit organization? They are created to promote art, culture, education and sports. These organizations are called not-for-profit organization. So the best example are charitable institutions, educational institutions, cultural societies, sports recreation clubs, hospitals, libraries and literary associations are some of the best example for not-for-profit organization. So they are not trading concerns, and of course they don't make any profit. They raise funds through what? Donations, grants from government and subscription from the members. I'll repeat, they make funds from donations. They get donations from public. Then they get some grants from the government, and they also make subscription from the members. And they also have to maintain proper books of accounts. Only then that will be taken up for the only then it will be taken up by the concerned authorities. And also they must account for all the cash receipts and payments, because it is very crucial to show all these records to the tax authorities. So let me repeat, these concerns are required to maintain proper books of accounts, and they have to account all the cash receipts and payments. So what are the features of not-for-profit organization? Following are the features. Number 1, not-for-profit organizations which function without any profit motive. They are doing service to the public at large or to a group of people who have formed that organization. Number 2, their main aim is to provide service to a specific group or public at large. Like hospitals, there is going to be no restriction on public who is going to take any kind of treatment from the hospital. And also there can be specific groups, they go and attend and they form a club where they are going to have their board games and all those play activities. So it's for a specific group. Next, generally they do not undertake business or trading activity. Like any other company, they do not have any business motive or making any profit. So they do not undertake any business. Number 4, their main source of income includes, like I said, donations, subscription, government grants and legacies. So the first important part is receipts and payment account. Receipts and payments account is a summary of the cash and bank transaction of not-for-profit organizations prepared at the end of each financial year. So when do we prepare this? At the end of each financial year. It is a real account. Why? It's a cash book, right? So it's a real account in nature. So the receipts and payment account begin with the opening balance of the cash bank book. So receipts and payment is nothing but a replica of your cash book. So you always have a opening balance. Number 2, all the cash receipts are shown on the debit side and all the cash payments are shown on the credit side of the account. All the cash receipts are, whether they are capital or in revenue nature, will be recorded. Why? Because the main aim in the receipts and payment is that all the cash receipts and payments have to be taken. You need not see whether it is capital nature or revenue nature. You have to simply account it as receipt or payment. Next, they may relate to the current year or the previous year or the subsequent year. Let it be an advance, let it be what is paid for previous year or for current year. We have to account this. Irrespective of the period to which it belongs to, it has to be accounted. Next, the non-cash items such as depreciation, outstanding expenses, accrued income will not be shown in this receipts and payment account. So very important to keep in mind is that receipts and payment account will be only cash receipts and payments, and there is going to be no bifurcation of capital or revenue nature, and there is going to be no need of no splitting this entire transaction for current year, previous year or subsequent years. So what is the steps in preparing the receipts and payment account? Number 1, you record the opening balance of cash in hand and the favorable bank balance on the debit side of the receipts. And if there is a bank overdraft, you will record it on the credit side. So like I said, opening balance is the first step. Second step is that the actual cash receipts during the year are recorded on the debit side and the cash payments during the year are recorded on the credit side. While recording the cash receipts, there is no distinction between revenue or capital. All the cash receipts are taken. Then, if the total of the debit side is more than the credit side, I am repeating, if the total of the debit side is more than the credit side, then the balancing figure will appear on the credit side and that will be the closing balance of the cash. Suppose the total of the credit balance is more than the debit side, the balancing figure will be on the debit side and it will be called as bank overdraft. So remember, either you should get a closing balance of cash or it should be a bank overdraft. Next, with respect to this not-for-profit organization, what are the peculiar items? That's what we are going to see. Because for a company, we know that these items are, this is how you have to treat such items. But what about these not-for-profit organization to whom these items relate to? Number 1, subscription. Not-for-profit organization usually collect subscription periodically from the members. They are collected either monthly, quarterly, half-yearly or even yearly. So in addition to some special subscription, like for example, there is going to be a tennis match. So there can be a subscription for tennis, then billiards and all these things. So all are getting collected from the members who are going to play these tennis or billiard match. All the subscription will be revenue receipt. I repeat, they are all revenue receipts. Why? Because they are going to get collected periodically. Number 2, interest on investment. For investments made, the organizations will receive what? Interest. If I invest, I'll get interest. It's a revenue receipt. Next, sale of sports material. Now, the clubs are going to have lot of sports material which is going to be either useless or they want to sell and get a new material. So they will sell those bat, ball and everything which is going to be there. They are all going to be what? Revenue receipt. Number 4, sale of old newspaper. Whatever newspaper they are going to buy for the members' benefit will be kept in the office. But what are they going to do with that? So they will sell those old newspapers and they will also be revenue receipt. Number 5, life membership fee. Whatever amount is going to be received towards the life membership fee from a member will be what? Capital in nature. Why? Because it is a non-recurring. Do we pay every time? It's going to be paid only once for the entire life membership fee. So that will be a capital in nature. So it is a capital receipt. Next, legacy. A gift made to a not-for-profit organization by a will. So when do we do this? Legacy. What do you mean by legacy? Let's assume an old person, he wants to donate his property, okay, to a charitable institution. Then he will be giving a will which will specify that his property should be transferred to this charitable organization. This will be a revenue receipt or a capital receipt. Of course, it is going to be a capital receipt. Next, admission fee or entrance fee. If the fee is going to be collected from every member only once at the time of his admission, it may be treated as revenue receipt as it is recurring income from a new member and admitted every year, and he may be like that fees, whatever is getting collected will be used to meet the expenses at the time of admission. So this, if it is going to be one time, it is going to be a capital receipt. If it is going to be recurring in nature, it is going to be a revenue receipt. So you should read the question properly whether this admission fee is for one time or it is going to be recurring in nature. If it is one time, it is capital receipt. If it is recurring in nature, it is going to be revenue receipt. Next, grant from government and other organization. So you might be getting some grants from the government because you are going to do good service and they are giving you some financial or non-financial support. This is called grant, which is given by the government to the organization. So this grant may be in the form of buildings or it might be for helping you in acquiring some assets. So this will be treated as, of course, capital receipt. It can't be revenue because it is not recurring in nature. So what do we understand in this? whenever you get a confusion whether it should be treated as a capital or a revenue receipt, please think if it is going to be recurring in nature or a non-recurring in nature. Then donations. Donations which are going to be received from a non-profit organization as a gift, and so we are going to classify this as two. Number one, general donation or specific donation. General donation are given without any specific condition that please use this donation for this purpose. Then it is going to be revenue. Otherwise, if it is going to be specific in nature, then we will treat it as capital receipt. Honorarium. Honorarium is paid to a person who is not a regular employee of the organization. We don't pay people salary. They might do some help and they are doing some service. So we will be paying them something called honorarium. This honorarium is like salary only, but it is not exactly salary and it is revenue in nature. Then purchase of sports material. There are two types of sports material over here, sports material or sports equipment. So please be careful when you read the question, read it completely, whether it is a sports material or a sports equipment. If it is a sports material, it is going to be a consumable. You are going to consume that sports material. Let it be bat, ball, net and everything. So they will be what? Revenue and expenditure, and they will be consumed. But when it comes to sports equipment, they will be bigger items like table tennis table and billiards table and all those things. They will be capital in nature and you have to treat them accordingly. Next, purchase of books for library. Again, books are going to be capital in nature. So now we come to the end of receipts and payment. So please keep in mind, receipts and payment is nothing but a replica of your cash and bank book. Now we are getting into income and expenditure account. So for preparing the financials of a non-profit organization, like I said, we have to prepare receipts and payment, income and expenditure and the balance sheet. So we are getting into the second part, which is the income and expenditure account. Income and expenditure account is a summary of income and expenditure of the non-profit organization, which is also going to be prepared at the end of the accounting year. And the purpose is that to get the surplus or deficit, how much well they have performed. That is what they are going to know. And it is nominal in nature. Why? Because we are going to see the revenue receipts and revenue expenditure of the current year alone are going to be recorded, and it is going to be prepared on accrual basis. So it is not going to be, we should know that this is nominal account in nature, which is the items of revenue receipts and revenue expenditure, and it will be only related to the current year. So you will not have past year or the future related expenses or receipts going to be maintained in this income and expenditure, and it is going to be prepared following the accrual basis of accounting. So it is just similar to a profit and loss account which we would have seen for companies, and we are going to have all the credit side and as the income, and the debit side is going to be all your expenses. Apart from these cash items, non-cash items are also going to be included over here. What are they? Income accrued but not received, loss or gain on the sale of fixed assets, depreciation, all these are going to be recorded. So I repeat, apart from cash items, unlike the receipts and payment, income and expenditure account is going to have non-cash items such as income accrued but not received, loss or gain on sale of fixed assets, depreciation, which will also be recorded. Now, it helps to enable the members to know the working of the organization and to know whether its income is sufficient to meet expenses, whether they need more funds, and it is prepared from it can be prepared from the given receipt and payment format. Let's see that. So before that, we will be seeing the steps for preparing this income and expenditure account. Number one, what we have to do is we have to exclude the opening and closing balance of cash in bank, because unlike the previous method of receipt and payment, we will not take the opening balance over here. So we have to exclude. Then we take all the capital receipts and capital expenditure outside this purview, because we are going to take only revenue receipts and revenue payments over here. Then, because we are going to take only revenue receipts and it will be pertaining to which year? Current year alone. So all your credit and credit side, which is going to be the income, and the debit side of your expenditure will be only for your current year. Due adjustments should be made for the income which is received in advance and income accrued for the current year and for the amount relating to the previous years. So we have to make certain adjustments that we will see when we go through the format. Next one is, similarly, the revenue expenditure relating to the current year only will be taken. So adjustments have to be made to outstanding expenses, previous year, current year, and the prepaid expenses of the previous year. Now I am going to repeat this because it's a very crucial point. Income and expenditure has to be prepared in this format. So your capital receipt and capital expenditure is going to be excluded. There is going to be no opening balance. Only revenue receipt will be taken, and adjustments should be made with respect to the current year transactions. And then also you have to take all your income and expenditure after adjusting your outstanding expenses and the prepaid expenses of the previous year. Then any income and expenses which is relating to a specific fund must not be taken over here. They will be taken as capital item. Then non-cash items such as bad debts, depreciation, loss or gain on sale of assets which are not recorded in receipts and payment must be recorded here. I am repeating, non-cash items will be recorded here. Bad debts, depreciation, loss or gain on the sale of assets. The last, the balancing figure of the income and expenditure will be what? Surplus or deficit, which will be transferred to the capital fund in the balance sheet. So if the total credit side of the income and the expenditure is more than that of the debit side, the difference is called surplus. And if the total of the debit side of the income and expenditure is more than the credit side of, then that will be is more than the total of the credit side, the difference will be referred as deficit. If you look at the format of the income and expenditure account, you can see on the credit side you have all the income. Number one, subscription. Like I said, the members are going to pay the subscription. Then you got some donations, and then you got admission fee from all your members and the people who have accompanied them. Grants which is received from the government. Rent, you did some party and you got some rent. Then you got some interest because you have made some investments. Then you have profit on sale of assets. And then finally we come to the debit side, which is the expenditure, salaries, charities, rent, donations which are paid to other charitable organizations, stationery, loss on sale of assets, depreciation. So if you see the last two figures, which is surplus or deficit. So the surplus will be on the debit side and your deficit will be on the credit side. So what is the difference between the receipt payment and the income and expenditure account? Please keep in mind, this is a very important question from exam point of view. Number one, the receipts and payment is prepared for the purpose of just knowing the cash receipts and cash payment, whereas income and expenditure is prepared to know the surplus or deficit during the current year. Nature of accounts, here only real account is going to be maintained, whereas income and expenditure will have nominal account. The basis of accounting for receipts and payments is going to be cash alone. It is a cash system of accounting. Non-cash items are not going to be recorded. Whereas income and expenditure account, it is based on the accrual system of accounting. All your non-cash items like outstanding expenses, depreciation will also be recorded over here. And opening and closing balance, the receipts and payment will commence with an opening and closing balance. But when it comes to income and expenditure account, there is no opening balance and it ends with a surplus or deficit. Nature of items, under the receipts and payment, it contains the actual receipts and payment, irrespective of whether it is revenue nature or in capital nature. Whereas income and expenditure account, it only contains revenue items and not capital nature. Period. All cash receipts and payments made during the year will be taken over there. But when it comes to income and expenditure, only those are relating to current year alone will be taken. So how do you treat the revenue receipts? So in this topic, we will see how you treat all these revenue receipts, because I told you, right, you have to make certain adjustments with respect to all the receipts which you have received in cash or bank. So we'll see that when the subscription is received for the current year, previous year and subsequent year, we have to separately mention, that is, the subscription is received for the current year, whether it is for the previous year or for the subsequent year. So on the credit side of the income and expenditure, we are going to say subscription outstanding for the current year, which is going to get added. Subscription received in advance in the previous year, which is meant for the current year, is also to be added. So when the total subscription received during the current year is given, the total subscription received during the current year is shown on the credit side of the income and expenditure after making the adjustments. So subscriptions which is outstanding the previous year, which is received in the current year, will be subtracted. Why are we subtracting? Because it is outstanding in the previous year. It is not related to current year. Then subscription received in advance in the previous year, which is meant for current year, will be added. Why? Because it is related to current year. And subscription received in advance in the current year, which is meant for subsequent year, will be subtracted. Why? Because it is for the next year and not for current year. So we are going to subtract that. Then how do we treat that in balance sheet? The subscription which is outstanding for the current year and still outstanding from the previous year, which is still outstanding from the previous year, will be shown on the asset side of the balance sheet, and the subscription received in advance in the current year will be shown on the liability, because you got it in advance. It is anytime payable. Okay, so that's why it will be on the liability side of the balance sheet, and outstanding is something we are going to receive, so that will be on the asset side of the balance sheet. एक pause दे दो. ठीक है, इतना ही. दो बार क्लिक हो जाता है. ठीक है, we'll do the next one. Stand we are using it here.